building bridges between Estonia and Germany, and Estonia and Silicon Valley. And I think probably the largest chunk of that bridge that you'd know about is a little company called Pipedrive, and being the investor on that deal. So if I could have you, Christian, come up on stage and you'll introduce your own panel.
Great. Thank you, Eero. Thank you. Great to be here. Great to be back in Estonia. It's my fifth Latitude conference in a row, and I've been here many times in between. We're going to talk about alternatives to VC financing, respectively the future of funding. Honestly, I have no idea how that became mixed up. I don't want to in no way insinuate that the future of funding will be automatically an alternative to VC, the current VC funding or the VC model. But maybe it is. We don't know. So we'll talk about that. And in terms of the panelists, my esteemed panelists who will be on stage here, coming up on stage, that's the hint. We're going to have Linus representing that's Victor, sorry, from a corporate venture fund by Deutsche Börse, which is the stock exchange in Germany, the Nasdaq of Germany. We'll have Pascal, who is representing a crowdfunding platform, Indiegogo. We'll have Linus, who represents the, let's call it the traditional venture capital model. And then we have Kaidi, I'm sorry for mentioning you last, but there's a point in that, who's going to do it all different. And I want to start out by having everyone give us a quick 1-minute pitch of how their model works, or what is it they do and how it works and why it's their way of doing things and why you're not doing something else. But keep it quick. It's just intro.
Should I go?
Linus, you want to start?
Yeah. Yeah, can you hear me now? Yeah, okay, right, cool. So I represent the old school VC model here. So meaning find about 25 companies in a portfolio, invest in them, and make about 3x on the fund return. So our LPs, our pension funds, and our EIFs are happy when we return money to them. So find like 25 fantastic companies to invest in, become a minority shareholder, help them grow as fast as possible.
All right, great. Pascal?
So my name is Pascal, and I work for Indiegogo's crowdfunding platform created in 2008. And we are on the model of with rewards for crowdfunding, launched in December last year, partnership with Microventure in the US to do also the equity crowdfunding part. I think.
So you're combining rewards-based crowdfunding, which is the, let's call it traditional crowdfunding in the US model, as opposed to equity crowdfunding, which has been around longer in Europe, with equity crowdfunding in the US now.
Yes.
Okay.
Only in the US. I mean, it's since it's regulation-based.
And what's like the smallest ticket that people invest on your platform? Is it like $100 or
I don't know. I'm not on the equity part, so it's my colleagues, and it's all new. But the team is in San Francisco.
Okay, great.
I'm not on that part since it's going to be only for US incorporated startups. So.
Okay. No. I meant on the consumer side when people invest. Right? Or,
I mean,
in the
mean
campaigns.
like for the equity crowdfunding. I don't know what's the minimum ticket. I think it's 100, but I'm not sure.
Okay.
100.
All right.
I don't want to say wrong
Good
stuff.
Thank you. Kaidi?
Thanks. Before I start, I promised to say hello to Peter. So, deal. So my name is Kaidi Ruusalepp. I'm the founder and CEO of Funderbeam. And Funderbeam is a startup stock exchange, global one, that we built on the blockchain technology. Why global? Because we think that it's the new norm. Global is the new norm. We need to unite investors. It doesn't matter where they are. With the startups, it doesn't matter where startups are. And the biggest problem with the startup investments is the liquidity. So this is also what we do. And why blockchain? We got out this the Nasdaq and the Deutsche Börse intermediaries. So.
Yeah.
Great. Victor?
And myself, Victor. Before I start, actually, I need to say that I recently moved to the good side, and I left the exchange to go into entrepreneurship. So I left my VC job. But talking about my previous role, I mean, the corporate VC, it's not that different than the traditional financial VC. I would say the main difference is that you have that added complexity that you need to find companies that can really add a strategic value to the corporate, which is something which I must say not everyone in the industry have been able to. So a lot of the CVCs have done poor results in actually fostering that collaboration with the startups, because it's a process that needs a lot of involvement and hours spent. And sometimes corporates love the idea, but they don't execute on it.
Yeah. All right, great. So in terms of the how we're going to do this now, what I thought it would be a good idea is to throw in some spice and punchy, controversial statements. So we're going to have on the slides, we're going to have a couple statements that I want our panelists to respond to. And I promise you, they have not seen any of them before. But I just realized that on these little monitors right here, which also already displays the next slide, they can see what it is. So if you see them start sweating and little curls right on their forehead, they're actually thinking about their next answer, their next reply on this. Oh, let's change it, right? Awesome. Thank you, thank you, thank you. It's just not, now they can't see that slide anymore. So it will be real surprises. So first statement, venture capital is like a drug. You need more shots. Meaning, you're expected to invest the money and then raise more money. Maybe we want Linus to take that first.
Sure. Unfortunately, this is very common, yes, that people talk more about when they raise the next round instead of actually starting to make money. Yeah. So yeah, it's very common. Not a good thing, though, but it's very common that this is the way that it works among a lot of entrepreneurs, definitely.
Is there any way to balance that out or counter it?
I think one thing is that I think just teaching people what it's about and having good sort of advice is sort of like where it needs to start anyways. And I think there are a lot of people like pushing it. Okay. But I mean, right now VC is, everyone wants to raise VC funding, which is obviously also a bit of an issue.
Mm-hmm. Anyone else?
I mean, I completely agree with what Linus just said. I think it's just how the industry is structured, right? I mean, at the end of the day, you see the founders spending 80% of their time just focusing on trying to raise funds. And there should be someone out there telling them that just make sure that you have a damn good product, and then the VC money just comes, right? But it's difficult. It's difficult to convey that message out. So I think that it's difficult to fight against that.
It's one of the things what we try to solve, we will solve, obviously, is the same what you say is that it's the seeds, and it takes you high. It takes you to the A, and A takes you even higher, which is to the B. It's like the steps, and you have to step those steps, and then you cool if after A is coming to B. But we think that this funding of the businesses should be smoother, and also so that the founders don't spend most of the time raising the funds instead of running the business. So you can raise as much as you want, or as much as you need, or as little actually as you need, anytime you need it, with the help of the not just crowd, but also the sophisticated investors.
And what happens if you don't reach that next level in order to raise more money? So your business plan just didn't pan out the way it was supposed to be.
But
what happens then?
But do you think VC would give you the funds if you fail?
No, I wasn't talking about specifically Funderbeam, but hey. But in your case, it's also the crowd investing, right?
Yes.
They make the decisions. Do you make any decisions for your
for
crowd investors in the selection?
Yes and no. Yes and no. The main partners for the Funderbeam is VC investors, small VC investors, angel investors, sophisticated investors who bring the deals to the platform so that we could automate the float plus add the liquidity. So in this case, they make the decision who they bring to the platform. And this is our ideal model. Right now, to work with the deal flow, startups apply directly. We get more than 100 applications a month from more than 35 countries already. So right now we do the job, but it's not our ideal case.
Okay. Yep.
Another sort of comment, obviously, is that sometimes it's also the VC who wants to put more money in, right? I mean, right now there's so much money in VC funding in Europe that, first of all, being an entrepreneur has never been easier in terms of funding right now. That's one. Secondly, a lot of them...
Do you guys agree? I don't know.
No, but then the other component is that sometimes now some funds have gotten so large that they want to throw even more money in there because they need to deploy that cash. So there's a bunch of companies now, that just raise money, and some VCs come and say like, hey, here's $3 million on that valuation. Then you have another one. We'll do 9.
Yeah.
Same company, same stage, different valuation, just because they need to deploy more cash. So VCs can
Not necessarily a healthy process,
No.
also in terms of the next funding round, but it gets too technical for that. Let's just look at the next statement. Venture capitalists will sooner or later be replaced by algorithmic investing. Anyone? Kaidi? Victor?
This is the one statement that I really disagree with. I do not believe in a completely non-human process on venture capital. Venture capital is a heavy human process, and there's a reason for that. It's because you need to have a feeling on the founders, so you need to have a feeling on the team, especially if you are talking about earlier type of stages. And you can have all the metrics that you want, but I don't think this is Moneyball.
So let me rephrase the statement. 4 out of 5 partners in a VC fund will be replaced by algorithmic investing, and 1 will remain to curate the algorithm. Linus.
Which one?
I can't wait until I can sit on the sidelines. No, but I do think there is something. I don't think it'll be replaced altogether again. But I do think that you're onto something. And I mean, there's a lot of cool initiatives happening exactly in this space, right?
Cool initiatives.
Yeah.
Yes.
I mean, let's be honest. I mean, I think if I take myself way too serious if I were to say that I'm going to be standing in the way of progression, right? Because I'm trying to foster progression.
Of course. Yeah.
So if I'm out of a job because of this,
Yeah.
so be it. That's completely fine.
There's something in it, because in Funderbeam we have 3 pillars, and the first pillar of our business is the data. And machines mine the data, we clean it, we combine it, we make competitors comparable, we make the industry sizes of the companies, everything comparable. And we have more than 150,000 startups that we analyze, and only 3 people working with it, only 3 people. And then you can see the nice user interface. So it's kind of, there's so much that the machines can do, but we leave the decision to the investors. They see the data, we provide the data, machines actually provide the data. You can make the decision. So it's getting there.
And like in France, you have some VC, or it's actually more like a business angel, like Kima Venture. They already have like some kind of automated process to curate startups for the investment process.
Yeah.
Can I add one thing super quickly?
Yeah.
I think there's also like 2 kind of schools around VCs. So one is the one that are basically stock pickers of one kind, right? So you look at purely on data, can this become something? The other one is the one that also wants to help the companies somehow. So obviously when we talk about this will be on sort of the picking, on the choosing side. But it doesn't say anything about adding value on top of that, because I do think that that element is still human, it's still a relational transaction rather than anything else.
All right, cool, thank you. Next statement, corporates should buy startups rather than investing in them. Victor.
It's difficult, right? Because if you buy the startup, you most probably will have no synergies at all. So if you are not realizing synergies, you are taking the full-on risk on whether the startup fails or not. You still don't solve the issue on convincing the corporate side to really engage with the startup. You just have one more brand in the portfolio. So I don't think that buying a startup would make it better for the corporates. I don't think that's a solution.
But isn't that the traditional exit path for the VC-backed startups, is that they eventually get acquired by corporates?
Yes, but it depends on the stage, right? So for example, in DB1 Ventures, we used to focus on late stage, and there was a big reason for that, is that if I go back to corporate and I talk to the head of product development, it's way easier to get them to really engage with my startup if the startup is already with significant traction, than if it is a very, very small thing. And and then the corporate will provide no value whatsoever. So I think the issue on the corporates is more on that side, and it's not so much on whether you should be buying instead of investing. I think investing is a good approach because you get your feet in different technologies that otherwise you would not be able to develop very quickly in-house.
Linus?
Sure. I think they should buy them, shockingly enough. And I don't think they should be doing much investment. I think if they want to do something, I think there's been a massive sort of trend in CVC, so corporate venture capital.
Yep.
One is that first they want to go and they don't know how to do it, but then they start some sort of venture and they keep on investing in them. Usually they lose a fuck ton of money, and then they go back to doing something else again. Starting in accelerators, investing as an LP in funds, like Cisco is doing now, sort of switch out completely the CVC model to investing in funds instead to get access to all the companies, but from an LP point of view instead. I think there are very few corporate ventures that have worked.
I agree.
Sort of disagree in the case of Funderbeam. We have a corporate investor, Thomson Reuters, maybe choices in the audience. The way they work with us is that they open the doors for us. And without their help, we couldn't enter quite many doors. It doesn't matter what continent, it doesn't matter what country. And it's a very, very big thing for us. And to get the know-how, let's see what the future will bring. But in our case, it has been a really, really beneficial investment.
So I agree on that short-term benefit. The question is if in the long term, and that's what the VCs, the independent VCs think about, is that they want to have maximum flexibility in who they sell, or the startup, who they sell to in the end, right? And having corporate investors alongside the VCs and the startup may yield to some sort of friction down the road.
May, but I think it's during the journey, how the relations are, what the conditions are, what the deal is. Emphasis on may.
Okay, all right, Theresa May. Kidding. Okay, rewards-based crowdfunding has produced more failure than success.
And it's probably true. I mean, like, it's difficult to run a campaign. It's just like very often I say it's not a crowdfunding platform is not a magic wand, and it's not going to make million by itself. So you really have to work hard on your campaign before and prepare it, before launching it. And I'm project evangelist for Indiegogo, and my job is actually meeting startups. And when I meet a lot of them that are like, oh, we are going to launch in 1 month or 2 months, and I'm like, have you built your community for the launch of the campaign? Oh, we are going to go to. Guys, it's already 6 months ago. You should have started working on that. So it's probably true that there is more failure because I think there is a big lack of preparation before.
But also post-campaign, right? In the actual delivery of the product. Is that something that you're concerned about? There have been some high-profile failures in the past couple of months.
Yes.
Where actually, 12 months after the promise, the product still hadn't shown up.
Yeah, it's true. It's one of the concerns, and that's why also Indiegogo has partnered, for example, with Arrow about now almost a year ago, but
Who's that?
Arrow Electronics, which is a top 500 company in the US, electronic distributor component, electronic component distributor, and they are all around the world. And they are actually going to look at the project and see, can the project be done? Like, is the science there in order to get the product? And they are going to do some coaching on the prototyping and manufacturing, and also helping the campaigners to avoid to have first too much delay, and secondly to be sure that, I mean, not to be sure, but gives the most chances to the project to get to delivery.
But that sounds like Indiegogo is going the venture way. So you're having a guy actually assessing now the feasibility of the product.
It's just, the idea is just, the market is telling us maybe you need to help campaigners to be sure, because when a project fails and like in deliverability, it's also hurting the platform, even if we are not responsible. So I think it's important that at Indiegogo we consider the project like in the globality and help as much as we can the campaigners post-campaign also to be sure that they are going to be able to deliver.
Would you say that crowdfunding is a feasible way to seed fund a startup and then go on to raise venture capital?
I think so. I think it's a great step, mostly in hardware, because hardware is really a field that is difficult and there is not that many VC. And when you are in the early stage, that's difficult to find funds. That's why crowdfunding is so popular on the technology and hardware field. And it's you do crowdfunding for the money, of course, but also for communication and marketing and finding business partners and like distribution channels, and also because you get feedback from the community. So you have several reasons why to do it, and I think it's a great way to build on the community, show you get traction for your product, and then go investors and show you you have proved that your product is interesting. So now it's a lot easier, I think. I mean, would be more a question for Linus, but
I'll add to it, if I may, because I also think that it's in the future, it's not going to be that maybe the seed round is good for the crowdfunding in later stages. Not. I think more the rounds will be combined and the crowd can join different stages. And raising the funds from many, many people, it's not just about raising the money, but it's about building the community. And in Funderbeam, we did our own round also. We didn't need the funds, but we wanted to let our fans, our users of the platform to join. And I have the T-shirt. It's written in Japanese, Funderbeam. And it's one of the Japanese fans that created the T-shirts for us. And he invested in Funderbeam. And he said that, I love your product so much, I love everything so much, I'm a web developer. May I build a Japanese language website of Funderbeam to explain Japanese people how to invest in Funderbeam? I said, obviously, you can do it. So he came to Estonia. All of Funderbeam team now wearing this kind of Japanese language T-shirts. And it's not just one story. We had the guy from Fiji, and the guy from Germany, and the guy from UK and South Africa. They all now kind of work for us and opening us the markets. Would we get it with the VC fund, even if we're, for example, doing a round? Probably not.
Linus, have you ever invested into a company that had some sort of crowd investors, either in parallel or before you looked at them? Either Funderbeam, AngelList, Indiegogo, whatever?
We haven't done any where there's been equity crowdfunding in before, but we looked at a bunch that have had sort of the rewards-based sort of crowdfunding campaigns. I don't think we've, in any of the funds I've worked for, have invested in one that actually had equity crowdfunding. No one.
There's no...
I have to say there's a little bit of a negative, sometimes a negative perception on a company that went through crowdfunding. Because there's this thought that there's some type of negative bias, that the companies that end up going through the crowdfunding channel are companies that were unable to raise institutional funds, which doesn't necessarily need to be true, but that perception at least is still in the market.
Right. All right, next one. Kaidi, trading early stage startup stock is only for gamblers.
Yeah, sure. No. I come from stock exchange market. I work for Nasdaq quite many years. So what we see now in the Funderbeam is exactly what's happening in the main markets is that the big institutions who invest in companies in the stock markets and in the startup markets, like the VCs and maybe some very wealthy angel investors, they have time to stay in the investments as long as they want to. But the small crowd and small investors, retail investors or the crowds, when they invest, they would also like to be part of the journey. They would like to invest, but their liquidity need is a bit higher. So they would like to exit earlier than the big players. So this is what we are doing. We see that, yes, there's liquidity in the market because people are trading, but that's the point. You should be able to sell, and you should be able to buy. And it's up to us as the market operator to make sure that it's not going to be the casino.
So it sounds like you have a very deep insight, of course, into what the company raised money for, the valuation, and then vis-a-vis what it is trading for. So could you share some numbers on that? As on average, is the whole platform trading on par? Does it average out, or is it up a couple percent or down?
It's up. All the information is available in Funderbeam platform. You can go log into Funderbeam. You get the information about the valuation, what the companies raised the funds. You get the information about the nominal value. We issued the tokens, but tokens is kind of the technical term. It's the securities, sort of. They trade, and you get the price, you get the latest price, and also the order book is visible to everyone. You can see the buy side, you can see the sell side, you can see the spread, you can see the latest trades, everything is available there. There's different companies. In Funderbeam case, we've been trading a year already, and after we announced a news that Mistletoe investing in us, then the price tripled. So the market is there, reacting as it should be.
Linus, working for an institutional VC, would you, let's just imagine your partners would find the idea just as exciting as you. Would you put a part of the portfolio onto the Funderbeam platform in order to be tradable? Just like, say 5 or 10%? Would that make any sense to you?
Yeah, I think so. I think there's a lot of opportunities on a platform like that. And I think a lot of, I think it makes sense, different cases make different sense as well. Because if it's a super, let's be honest, semi-boring enterprise kind of business, then the likelihood of that being funded on any sort of platform like that is just not likely. But if it's sort of a consumer play where you can get those kind of fans, you can get that sort of interaction, and they can help on that side, then I think it makes sense. And I think the other part is the liquidity aspect, right? Yeah. So those two components, I think that could be cool.
But what about the startup? Do you think the startup would be happy with that move? I mean, because you are basically completely changing the cap table.
Yeah, I think the cap table is always an issue, right? And I think you would have to manage that. And I think that's the main reason why a lot of VCs have not invested in companies that have taken in equity crowdfunding before. Because of the cap table, because it's harder to control all the sort of the decisions that need to be made.
Yeah, but in our case, we solved the issue because we have just one investor in the cap table, which is the syndicate. We do the syndicated investments. So in the startups, it's hassle-free in a case that you have just one investor. And the trading is going to be within the syndicates, even though the investment is the equity investment of the startup or the convertible notes. So that's how we solve it. And the way we could get the investments from all around the world. So there are solutions for it.
There's also a stage thing here, right? When it happens in a company's lifetime, because I think quite often you don't want there to be a lot of people with equity in the company that doesn't work for the company, that doesn't really bring that much value to the company. And I think that's an important element about the cap table. So quite often, there will be sort of, if you've done an angel round and then you've done a seed round, you still want the founders and the operational guys in that team to hold like a large portion of that company. And you don't want it to be 50% of someone who doesn't provide any value, except for being you just tag along.
Then it would be only a small portion of the company on a platform such as Funderbeam. The problem then, though, is the question, is it representative actually of the liquidity of the stock and the trading? But then we're talking about NASDAQ mechanics, which we just don't have the time for. Lucky.
The NASDAQ of
All right. Next one. Blockchain is overrated. Or every VC would have completely shifted their focus on just that. Or maybe not understood.
Well, that sort of has happened. There's a lot of VCs that shifted the focus completely on blockchain.
Yeah. You think so? Okay.
I think it's.
Are they all qualified?
I think blockchain is going to change significantly the landscape in finance. I do believe on that. But I think it has been overrated. And I think right now what is happening, which is very dangerous, is that you're finding a lot of startups that are using blockchain just as a marketing excuse, and not necessarily to deliver any value or because the business model actually needs blockchain.
It's like saying AI these days.
AI
It's
powered
like
big
AI,
data on
machine
blockchain.
learning.
Yeah. It's the painkiller for every pain on earth. It's the blockchain. You can solve all the problems with the blockchain.
So when Kaidi wakes up in the morning, she has this warm, fuzzy feeling about the blockchain.
Yeah.
She pats her children and says,
yeah.
blockchain will solve everything.
Yes. Everything is in the blockchain. Oh, my kids' grades in the blockchain. When they get the bad grade, I'm going to register it in the blockchain. It's going to get better. The blockchain actually has two meanings. One is these startups who use blockchain to solve their problem, and that's really the case. Does it solve the problem, or it makes even more sophisticated the business? So it's up to the VC to validate. It's going to be this kind of buzzword that quite many people use.
Yeah.
We heard quite many stories, and I was like, all right, okay, that's not the blockchain thing. But so on the investment side, and then what we did, because of being the startup, you have nothing to lose. You put all in. So we built the trading on the blockchain just to see whether it is the next big thing or it's not the next big. The fact is it's too early for the technology actually to do something really big, like the trading. The capacity is still too low to do the proper trading. But for the post-trades, to record the transactions, to record the ownerships, to cut out all this kind of crazy intermediaries, central counterparties, clearing agent stuff, it works perfectly. So quite many establishment and testing is around the ICOs, around the funds that actually built on the ICOs, where you don't know who your fund investors are. Yeah. So this is definitely the new grounds, what we have to keep an eye on. The blockchain technologies, there's quite many blockchain technologies, quite many coins,
You want to just give a quick
exchanges.
30-second definition of ICO?
ICO is the initial coin offering, where you raise the funds through issuing the coins. Through issuing the cryptocurrency. So investors buy a cryptocurrency and start trading on different cryptocurrency exchanges, which means that normally you don't give away the equity. It all depends on the deal, but normally it's kind of you don't give away the equity.
But does that then shadow a part of the cap table,
No.
of the equity of the company?
It depends on the how the legal setup is.
Okay.
But the traditional one is no. It's
right.
just it's like the way of the Indigo. It's your Indigo 2.0. You can put it on the blockchain and start doing the ICOs of Indigo.
I'll submit the idea.
Yeah.
All right, good, thank you. The truth is, the majority of startups should not seek VC funding, but instead remain bootstrapped.
Hallelujah. It's true, come on.
Why?
No, but there are a lot of ideas that people... Right now, there's a hype about being an entrepreneur, which is fantastic in many ways. In other ways, it also means that there are a lot of stupid Me Too ideas out there that doesn't really make sense. There's a lot of companies that they're not going to build a company. At best, they build a feature, and even if they succeed, they still get crushed. Because then it's another feature for a big company, and they can do it in no time. So I think that a lot of companies should definitely not talk to VCs.
So how much deal flow do you get per year? How many deals do you look at as a firm? It's like, what,
As a
3,000 or something?
Yeah,
Let's just say that, 3,000.
Yeah,
so
something like that.
1,500 of that,
Yeah.
you would actually say you wouldn't even need to
No, God, no.
spend the time on...
No. They shouldn't do it because the market is not that big.
And which of the 1,500, which ones is that? It's like the marketing budget, right?
Yeah.
You don't know which
No.
one it is.
But I think it's there's something that's been lost for a lot of especially first-time entrepreneurs, which is math. Do math. Because it's kind of easy to actually calculate if this is worth pursuing or not.
All right.
Sorry, I'm being a little... I'm a tough love kind of guy.
Statement, but so is that, so I agree. Anyone else that wants to just contribute quickly? Nope.
Just the question is it because, like you were saying earlier, there is a lot of money, and so I mean, that's also to some extent the fault of the VC investing and pouring money in almost everything. So, you know, like.
No, but I think VCs, you know, historically, the way that VCs have been working is that they should fund ideas of the future, right? They should fund stuff that, you know, what we think is going to happen in 5 years or in 10 years, not yet another marketplace for vertical X. Or yet the Uber for dogs, or the...
Yeah, but on the other hand, the VCs are convincing their investors that there's all these great startups out there that they want to invest into.
Yeah,
right?
of course,
okay.
of course.
Let's go on.
It keeps
All
us
right.
humble.
So what we're going to do now is we have about 25 minutes left. We're going to go a bit snappier, a bit quicker. Each one, or for every complete the sentence, one of these panelists will be asked to complete that sentence. And it'll be... and then we have some time for questions and answers if there's the wish for that. So Linus, my next investment will be in.
Well, come AI. It'll be in AI. God damn it.
AI. All right.
It'll be in AI.
Blockchain-based AI.
Blockchain-based AI.
Exactly.
Blockchain-based AI. All right. Awesome. Kaidi, I own Bitcoin worth. If it's too much, just cut off a zero.
I own tokens on Funderbeam platform issued through the Bitcoin blockchain, but I don't own Bitcoin.
Okay. All right. And Victor, because you're a fintech VC, I figured you would own some Bitcoin.
I don't own Bitcoin.
You don't own any Bitcoin? Actually,
No,
I don't either, so that's all right. Victor, the reason why I left Deutsche Börse is...
Yeah, I had envy of entrepreneurs. After seeing so many startups, eventually you feel, instead of judging people, I should be trying to build something on my own. That
Which
was
is
my
what?
reason. We're building an accelerator for gastronomy ventures.
All right.
So gastronomy
Wow.
businesses.
Interesting. Food tech, entrepreneur. Here, left corporate. Give him a hand. Next one. Pascal, Indiegogo, struggling hard to keep up with.
I will
They
say
haven't heard any of these before,
brand
this is-
maybe like I guess probably maybe brand awareness. It's
Brand awareness?
yeah, it's I mean when we are two big platform like global platform on this market, and that's the fight.
Okay. All right. Cool. You know, so far my worst day as an investor was when?
When we didn't manage, in a previous fund, managed to raise more money to that fund.
Sorry, come again?
Okay, so it was at another fund that I used to work for, and that you know decently well, when we didn't manage to raise more funds to that fund, meaning that basically, this is the cash we have.
Okay.
We can invest more.
Which also means then that you counted the days that...
Until I left the fund.
There we go. It's the day of insight.
Yes.
Kaidi, next year, Funderbeam will...
Funderbeam will be funding and trading companies not just in Europe but also in Asia.
Wow. Cool. Good. Give her a hand for that. The magic of Taizo-san. Pascal, next year, Indiegogo will?
Oh, that's a good question. I don't really know. I'm not on the strategy board,
but you will have more entrepreneurs in France getting on your platform.
At least celebrating the 10 years of the platform. So.
There you go. 10 years, Indiegogo. Yep, there you go. That's a good one. Linus, as an entrepreneur, if I can't raise VC money, I should instead do what?
You should, well, first, I think most people still don't focus enough on, in this startup company, doing consultancy work and making sure that that fund, if they build a product company, I think they should do that. Then as they grow, they should start getting it from other kind of investors. Let's be honest, I think VC is just one category of investors, right? So I think angels or other platforms are a good option too.
It's definitely one thing entrepreneurs very often forget, that VC as an overall category for funding is probably, I don't know, what, 5–10% of the overall funding universe. Probably 1%. Point. There you go. But you're counting all the pension funds, which I'm kind of trying to leave out. But yeah. All right. But yeah, good point. Pascal, the biggest threat to traditional venture capital will be.
Ooh.
I gave that not to Linus, but to you, so
Yeah.
kind of like, right?
Traditional venture capital. I don't know. That's a good one. I
Well,
don't.
unless Linus has an idea.
Yeah.
No,
Or
I
Kaidi?
think it'll be what we're seeing with the platforms where you get retail investors funding companies faster, more efficiently. I think that will be definitely the biggest sort of threat,
Yeah,
for sure.
so Kaidi is a threat.
Thank you.
Yeah.
Thank you.
Yeah, of course.
Thank you. Krav Maga Kaidi. So.
Yeah, we'll fight it out after.
All right, awesome. Good. Linus, the number one advice I give to entrepreneurs is.
I think, okay, so for pitching, be a human. When you come to a lot of events like this, then it sort of becomes that sort of, you have that routine, that 1 minute thing. You just need to say it super quickly, and you forget to be a human being. You become a robot, and it's hard to connect with you. So be a human being. If you're human, we want to get to know you.
Yeah. Victor, just throwing it at you.
I think you don't need to bullshit. I know everyone can advise you to say, look, VCs want to hear this, want to hear that. That's not a good strategy. I think focus on showing that you're a very professional, capable founder, and focus on convincing the VC that you have a good product on facts, not on.
Okay. All right. Thanks.
BS.
Next one, Kaidi. The number one advice I give to
I have a
VCs
good advice.
is
I have a good advice. Don't work with startups in a way that you talk to startups only 4 times a year, at the end of every quarter, through the email, sending the Excel sheet and asking to fill it in. Never do it.
It's a good one. I've done this in the past. I'm guilty. Thank you. Linus, my best day at Wellington Partners was when? There it is.
Oh, yeah. So the answer to the other question, excellent. That was when one of the companies that I sourced got a massive lead investor from the US. Sequoia came in, which was their first seed deal ever in Europe.
Great.
So when I did that, I was a little cocky that day.
Yeah. You can imagine what it says on his resume now, whatever he
Exactly.
sends out, right?
Don't
It's
read my
like-
LinkedIn, all I'm
like
saying.
it's like a line item. It's an extra line item. Oops, sorry about that. So, Kaidi, I had hoped this panel would be much more, less.
I thought it's gonna be another boring funding panel. It's so fun. It's so fun. I'm gonna compliment you later. It's really, really fun.
Pascal, 5 years ago, I thought Indiegogo referred to a.
5 years ago, I already knew Indiegogo.
You know,
5 years.
okay.
Yeah,
How
I've
about,
been in
about
the industry.
8 years ago? Because they probably just emerged and you had never heard of them. 8 years ago,
Yeah.
I thought Indiegogo would refer.
I would have been a fun music band.
Music band?
Yeah.
All right, yeah. Okay, Linus, every VC should do X in his or her life.
I think every VC should do an operational stint of some sort.
Which he says because he just did that.
In what? What?
No,
operational-
do an operational stint,
Oh, okay.
being in a startup yourself.
Okay.
Yeah.
Because I think you learn so much
Yes.
stuff that you don't see on the other side.
Yeah.
I think any VC should.
Yeah.
Yeah, it's a good way to.
Probably the number one source of knowledge or insights.
I think so. I think.
Practical hands-on knowledge.
Yeah, for sure. You learn so much from it.
Victor, the truth is, most corporate VCs
Fail.
All right, there it is.
But there are some.
left.
But there are some that are good at what they do. Very little.
Do you want to name them or?
Very few ones. DB1 Ventures, we were doing quite well. No, that's the truth. Most corporate VCs fail. They don't have the clear objective in mind, and then it just goes downhill.
And it's true. Corporate VC very often is dependent on corporate strategy, right? And these moments in time when the pendulum swings to the left and everyone does corporate VC, and then there's some sort of downturn, and then the new CFO comes in and he says, why are we doing this? It's not core strategy, so we'll get rid of that entire portfolio. And this is probably the number one risk in a corporate VC, strategy change
I
of the
agree.
mothership.
I agree.
All right. Kaidi, the biggest mistake at Funderbeam we've made so far is or was?
Two mistakes. First, when we started to build the data products, we came out too late. We tried to polish it too much. We should have got the market feedback much earlier. And the second mistake is that we started to build the stock market at the beginning, or the trading platform at the beginning. So we should have told the vision at the beginning, because we've been talking about what we have, and it was the data. Now people talk about Funderbeam has pivoting. We never did the pivot. It was our vision from the beginning. So tell about your vision, don't talk about what you have.
Tell about your vision, but don't talk about what you have.
No, it's don't just stick with what you have. Like we had the data, but we were building the funding and the trading platform. So we were talking about the data, but forgetting to tell about what we actually want to be.
All right, cool, thank you. Pascal, in the future, Indiegogo's challenge will be to?
I think to evolve, because crowdfunding is going to change also, and
is it kind of maxed out, do you think? Well, not maxed out, but it plateaued?
I would say it depends on the market. Like if you take it's actually probably matching the maturity of the market it's in. You know, like if you take the US, yes, it's kind of like plateau. If you take Europe, it's still progressing, and if you take Asia, it's like booming. Might be a little bit strong, but it's just. I think it's matching the different ecosystem and like Asia. So future might be actually, for Indiegogo, might be Asia.
Interesting. All right. Kaidi, female founders are better founders because?
Because we listen.
Good one. All right, we'll just let that stand. Kaidi, another one for you. I have no doubt entrepreneurs across the world will soon. You can imagine how much fun I had coming up with this, right?
I'm impressed by the moderated panel.
It took me a bottle of red wine.
Yeah, we'll definitely be more connected. We'll definitely share more stories. And we'll definitely share more feedback about the VCs.
Good one.
Who invested in them.
All right. Linus, the biggest secret in Inventure's portfolio is the new fund.
The new fund.
Linus works for.
The biggest secret in the portfolio is
I'm pulling his leg.
I know, it's tricky. What can I say? What can I say? I think that we're gonna see some cool. We're gonna have some cool announcements soon, okay?
Okay, all right. The biggest non-secret. All right, awesome. I think that's it. So give them a hand, really. That's it was wonderful. We have. Really, seriously, they didn't know about this, the format and the questions, the content. So, we have 10 minutes for questions. What am I supposed to throw this thing to whoever raises his hand and make sure that I'm not hitting anyone else in the
who wants to be hit
in the path? Any questions? Any comments? Feel free.
Don't be shy.
Oh, then we'll just continue. I have my
one
second
here,
deck.
One here.
I'm kidding.
Thank you. I have one question. What's the value add of blockchain to Funderbeam?
The value add is the trust. The blockchain is the technology that provides the trust. It's the technology where you can store the shareholdings, the transactions, the information about the transactions. Normally it's provided by the institutions. We could build it on the Excel, but what value add the Excel has. So we use the trust of the technology. And I think this is going to be the big shift in what the blockchain technology will bring is the shift of the trust from humans, from institutions to the technology.
But why would I trust that more than the bank, which has a big brand name, combined with a big IBM mainframe. I'm just saying, it's like, you know, I mean, there's a lot of trust in that too, right?
Yeah,
Aside from the crooked bankers and all that stuff,
Sure,
but the mainframe works, right?
it depends on first what blockchain you choose. You may choose IBM blockchain. You may choose the public blockchains. But so far, no one has been able to crack this technology, to change it, to change the chain, to change the history in there. And to do it, you really have to go and hit tens of thousands of computers.
Okay. All right, thank you. Next question over there.
What are VCs good for then?
What was the beginning of the question?
What are VCs actually good for then? If we have all these alternatives, why do we need VCs?
Yeah, it's a valid question, right? I think there are a few things. I think it's mostly about sort of the if they can add some sort of value to your company, some sort of value add, and that value add can obviously be tons of things, right? It can be expertise or network in a specific space. It can be that they have connections to the next sort of funding round. It can be that they can help you with recruitment. A lot of the stuff, when you get funded by a VC, that gives sort of signal value too. So that kind of signal value usually helps with, you know, recruitment. It helps with partnerships, partners taking more seriously, and all those things. So it's sort of like it builds up on the sort of the value add that a VC can bring to the table.
And also, I think the alternatives, they have limits in terms of amount of money you can raise also. So like you say, when a VC invests, you get more just than the money. You also get access to the network of the VC. So it's really more than the money itself. That's why.
And just one final thing, I think there's a lot of CEOs here, right? CEO, a founder, that's a lonely position. It's a super lonely position where you need to pull that company from, you know, going from 0 to 1 of some sort. Sometimes it's also good to have someone who's your sparring partner. Yeah. I try to see it that way. I want to be one of the first guys that they call if shit happens or if things go well.
But then it's about the personal relations.
Of course.
So there can be two different VCs. One where I fully say that forget, go close the fund and don't invest anymore. But the others are like friends. You can call, you can work, and you do feel it's like the VC. It's more like the advisor of your company.
And then I must say, if it's for example, if it's a corporate VC, you get access to clients, you get access to partners. So I mean, we massively scaled some of the companies that we had in the portfolio just by the sake that we were in the center of the financial ecosystem. So anyone on the fintech scene would benefit significantly when your VC has the connectivity.
It adds credibility,
of course,
and open source. All right, thank you. Next question there.
Hi, thank you for a great panel, by the way. My question is to you, Kaidi, about publicly traded securities. Basically, are subjected to heavy regulation to minimize fraud and take out a little bit of risk. How do you see the need for regulation to prevent sort of market manipulation when you start being able to almost publicly trade startup securities?
Yeah, it is an important issue, and this is what we daily work at. We haven't been putting the price and the trading specifically to understand how the market is working so that we can introduce the rules. We can introduce the barriers or restrictions on what you can't do on the market. It is a serious issue. So after I left the NASDAQ and now I'm working with the Funderbeam, it's like a small brother of the big exchange. It's totally the deja vu. So we have to keep an eye on it, but also balance that it won't be heavily over-regulated, because then it would make no sense.
All right. Okay.
Nice.
All right.
Wow.
Next one. Any other questions? If not, we'll just call it that. And thank you very much. Thank you for being here.
Thank you.
And
Thank you. Wonderful.
All right. Awesome.
Thank you, Christian.
Thank you, Kaidi.
Absolutely amazing.